Do you actually know what your insurance program would do on the worst day of a catastrophic claim? And do you know the one gap that catches food distributors off guard more than anything else? By the end of this video, you'll know if your program is protecting you or putting you at risk. And I'll show you a simple way to fix blind spots without a lot of hassle or frustration. Hi, I'm Coyle. Welcome to my channel where we talk about the risk and insurance issues facing business owners today. My objective here is to make you a more informed insurance buyer. So if you run a food distribution business, chances are you're here today because a problem hit a nerve. Your premiums have jumped, your broker may be AWOL, a claim didn't get paid the way you expected, or perhaps a carrier is pulled out of the marketplace making availability a real problem, or any number of other common business insurance problems. And that's on top of everything else you have to deal with every day. You bought insurance for peace of mind, but what you have feels like guesswork. And here's the truth. Most business owners learn the hard way. Insurance programs are often overgeneralized, built for the masses, and fail to address a client's specific risk factors. That's why you see gaps around cold chain exposures, product contamination recalls, in-transit spoilage, contingent business interruption claims, cargo limits that lag behind what you actually had, cyber threats, and workers' comp costs that never seem to come down. The result is a confidence gap. You're paying a lot, yet you're still wondering if you're protected, and you question, why does business insurance need to be so complex? Here's exactly how you can fix this, and you can start today whether you work with me or not. Grab your current policies and look for these 3 coverage gaps that I see in 90% of food distribution policies. Gap number 1, transit spoilage. Does your coverage follow your goods when they're on a contract carrier's truck or your own truck? Most policies stop at your docks. So that $50,000 or $100,000 load that spoils because a third-party reefer unit fails, you might be holding the bag. Gap number 2, contingent business interruption. If a key supplier goes down and you can't operate, are you covered? Your facility is fine, but you can't fulfill orders because your supplier had a fire. A standard business income policy says, not our problem. Gap number 3, product recall. Often, food distributors will accept the recall coverage built into their package policy. Unfortunately, these endorsements will offer minimal limits, no lost income protection, first-party only coverage, and very limited coverage triggers, meaning you need to prove actual contamination, not suspected contamination. The fix is not to go out and shop to get more quotes. It's about aligning your program with how your business actually operates. And here's how I guide food distributors and other companies through this situation. The first thing is I map their actual operations. Not what the insurance applications assume you do, but what you actually do. You can't insure what you haven't identified. I like to follow the inflows and outflows of a business and the related processes around that. This way, I understand how things work and where the risks are. The second point, audit what you have. Are your limits tied to real peaks or imaginary numbers from 10 years ago? Does spoilage coverage follow you off premises? Is your business interruption worksheet current? Does business interruption cover you if a key supplier suffers a significant loss and halts your production? And many other questions. Third, right size the coverage. Sometimes the fix is a few simple endorsements, not a new carrier. Sometimes a total overhaul is required, but you don't know that if you don't do the homework. Let me give you 2 real-world examples. We showed one distributor that their program didn't cover refrigeration loss during transit. They thought cargo coverage meant refrigeration coverage, and that was a 6-figure exposure waiting to happen. We fixed it with 1 cheap endorsement. We helped another implement a basic warehouse safety program. Claims fell 40% over 3 years, and their mod dropped from 1.15 to 0.89, and the workers' comp cost came down about $80,000 a year. This is what happens when you get this right. You stop wondering if that load is covered when equipment fails. You don't lose sleep when suppliers have problems because you know your contingent BI works. You know precisely how claims get paid instead of hoping that they do. Look, you obviously don't need me to fix this. You can audit your policies and identify gaps yourself. But if you want someone who has done this with hundreds of complex business accounts like yours and can spot these issues in 20 minutes instead of you trying to figure it out over 6 months, potentially learning the hard way, then let's talk. It doesn't matter if you end up working with me or not. Just fix the gaps, whether that's with your current broker, a new one, or with me. But don't let your operation depend on coverage you haven't verified that actually works. If this hits close to home, then let's talk. I promise, no pressure, no sales nonsense. You tell me what's on your mind. Your broker is AWOL after selling out. The costs seem out of line, a claim that went sideways, service standards suck. Whatever it is, and I'll tell you exactly where I think the risk sits and how I'd fix it. If your current program is on point, I'll say that too. Click the link below to schedule a quick call. Again, no pressure, no nonsense, just a conversation to see if we're a good fit for your situation and help you get back to the peace of mind you deserve. Here's the bottom line. Insurance for food distributors doesn't have to be confusing or costly. You need clarity, the right structure, and a guide who knows your world. Let's close that confidence gap you're feeling and get you protected the way you actually operate. Thanks.